Recent price history weakens an argument against easing U.S. restriction of the export of crude oil. The argument says exports above minor amounts now allowed would raise the benchmark U.S. crude price. Under current conditions, that's probably so. The domestic marker, West Texas Intermediate, is selling at a discount to its international counterpart, Brent Blend, with which it once traded at near equivalence. The WTI discount appeared in the first half of 2011 and has persisted except for a brief period in the middle of last year. A reason for the discount is surging North American supply from tight oil plays in the Canadian oil sands. Surpluses have developed at key market centers, first at the trading and storage hub at Cushing, Oklahoma, and more recently in the refining megaplex on the Gulf Coast. So yes, if crude produced domestically in amounts above nearby need could be sold profitably outside the U.S., arbitrage would squeeze the WTI Brent margin, at least partly by lifting WTI. But export opponents argue further that a WTI increase would raise the U.S. gasoline price. There the case begins to fray. When the WTI price disengaged from Brent in 2011, U.S. spot gasoline prices didn't follow. They continued to move with Brent. Market structure explains why. Trade restrictions on U.S. crude don't apply to oil products. Gasoline, unlike crude, is fully connected to global markets. The price of gasoline is influenced more strongly by broadly traded Brent than by bottlenecked WTI. So while allowing the export of U.S. crude would allow WTI and Brent values to move back toward convergence, the WTI increase likely to dominate that adjustment wouldn't automatically mean higher gasoline prices. The U.S. will remain a net importer of crude oil. Exports, if allowed, would relieve pressures of localized surplus such as the one developing on the Gulf Coast. That would let a locally produced global commodity compete globally as it should. Market efficiency thus would improve. Consumers always benefit when that happens. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective that appeared first in text at www.ogj.com on February 14, 2014.